All right, trading ranging markets using volume. So when I open up the chart today and I go to the 1 minute, this is what it looks like. So there's no clear direction in the market, right? So you can either say, I don't want to trade this. This is not the market that I like to trade in, which is totally understandable. But if you do decide to tread these waters, here's how you can get an edge in a ranging market, right? Using volume. So the first thing I want to do is I want to go to the higher time frame. So from here, maybe I look at the one first, right? If I look at the one, that 1 minute range looks like this, right? And as you can see, we got this bottom tail PVC peak volume candle, which is going to be bullish because it's a bottom tail. So the expectation after a bottom tail PVC is bullish price action. Okay, so there's my bias within the range, right? And then I'm going to scroll or keep going down the time frame until I see what exactly makes sense, right? So on the 30 minute, we got a bullish PVC. Mind you, this is very choppy. There's nothing here. There's nothing here. So let's go down again to the 15. On the 15, bullish PVC, right? But again, there's not really much to work with. You go to the 5. Now, when you go to the 5, you start to see little possibilities within this movement, right? Especially if you say, well, I want to get in long, So we got a ranging market and we have bullish PVCs. So we want to get in long. So we're going to want to see price travel to the bottom of the range to one of our bullish levels at the bottom of the range. And then we're going to want to get long at the bottom of the range, right? So right here, what I have marked up is we got bullish PVC here, bullish PVC. This is my bearish IVC. So when the market is ranging, typically you're going to have a bearish PVC at the top of the range. You're going to have a bullish PVC at the bottom of the range, right? So as you can see, if we just mark up this here, you can see every time we get to this low, this was my market open PVC. Every time we get to this low, rejection, rejection, right? Rejection. Here we failed to even run these lows, right? But we got this bullish IVC right here, right? So the same way how when this formed, the first time we rejected from the high, right? We rejected from the high there after this bearish IVC form, igniting volume candle, right? This form, and then look, boom, we get this bearish run, right? That's what you want to see. You want to see a bearish. You want to see price moving in the direction of your PVC, right? So at the top of the range here, we got this bearish PVC, right? We take the high and then we run the low, right? On the way down, we sweep this low, we form this, and you can just look at the volume here. And this is a good indication that, we should definitely get a nice strong push up from this candle because look at the volume after this candle forms, right? The volume dies out totally. This black line here on my volume is the moving average for the volume. So everything beneath this black line is the volume falling beneath my average, right? So the volume falls off dramatically, and you can see it visually, right? So what happens is this forms, and we get a bullish run, right? And then when we retrace, this becomes our reference point, this candle. So I'm going to want to look for a bullish indication once price reaches this level. And that bullish indication looks like this here. On the way down, we're not taking any highs, right? But then we get into this candle here, and look, this high right here gets taken out. This high gets taken out, so my entry becomes this right here, this level right here. Or you know what? Oh, that's not what I want to do. This is it. I think this is it. And because it's a ranging market, I'm gonna target the nearest swing high, right? And I'm gonna be giving it about 100 handles. Give my entry about 100 handles. Now, oftentimes I know beforehand, if I really need to, if I need to get out early or not. But I would just go for a 1-to-1 here and target this, right? So we got the ranging market. We traveled up the time frame to see what the bias, because the thing is, when the market's ranging, but we have this bullish PVC, the expectation, it's not a guarantee, but the expectation is that we're going to want to break out of this range bullish, right? But you also have to consider in previous price action. So this is we're inside of an even bigger range, right? And we have bearish PVCs, right? Which we're on top of this bearish PVC here. So it's kind of acting like a support level. But overall, we've got bearish price action. Then you see we got a big bearish PVC right here, right? And compared to the volume today, this is the volume today. It's not. It's not even close. So if price was to break bullish, we would expect it to reject right around where it rejected already, which is the low of this candle. And look, this is where we rejected at this morning. So even though we have this bullish PVC here, when you zoom out and you look at the entire range, you see prices already traveled into the low of where the most bearish volume is at. We traveled into that low and we get a rejection exactly from that point. And it's not the first time we've rejected from that level. This is our reference point right now for the buyers. The buyers want to reference this level to test the strength of the sellers. And every time we get here, right, this first time we retraced into it, we made a lower low. Right, we retraced into it again here, and the market is still moving, but we can possibly make a lower low. So if I'm short in a ranging market, right, obviously if I'm short, I want to be getting in at the high. If I'm long, I want to be getting in at the bottom. Personally, I like to kind of go the what the immediate volume is telling me. Like, this is the immediate, simply because it's just easier to catch that momentum, right? It's easier to catch that momentum, especially when you look at these. Now on the 4, I think we got a bearish PVC forming. Yeah, we do on the 4 hour, right? So, and I'll show exactly how I executed this, because I actually added to this here, right? So I got in. I actually got in at 257, about right here, and I added a contract, right? So we had this bullish run up. All right, let me get rid of this and just put up the execution. We had this bullish run up here, coming off of my level, and then we got this rejection at the bearish IVC. But on the way down, we had highs being protected, right? They're not being taken out, and then they get took out right here. I add one contract right here. I get in with two contracts, two micros, and I add a micro right here. And I'll show the execution real quick. So really that simple. Um, so yeah, and again, I'm not holding this for a home run. Not in a ranging market. You might this if I held it to this level, that would be in my by my standard that'd be home run. Because in a ranging market, I'm expecting price to turn around at every swing high and every swing low. You know, so we got swing high here. I get out right here at the top, and we get this move here. You know, mind you, price has already traveled back into our bearish IVC. When we look at the five, it'll show you. All right. So once we reference the bearish level, and we expect for sellers to come back in the market the same way we did up here at this level when we reached this PVC here. I believe this was on the 15. Yeah, this level right here. So that's it. Just a quick video showing you guys how to trade ranging markets in an effective way using volume.